Alright guys, today we're going to be going over some back to the basics support and resistance. Support and resistance is fairly simple, but a lot of the times is taught wrong, I believe. So a lot of the times people will teach beginners that, draw a straight line and this is your support and resistance. This is your support and resistance and, somewhere in here somewhere. So I actually don't believe that that's the best way to teach it. There's a couple reasons for that. One is because to say that support and resistance is kind of like a ceiling or the floor, and that once you hit it, it's going to reverse is pretty naive, I think, considering how rapid the markets can be. So quickly, I'm going to show you what I feel is the best way to mark up your support and resistance. So using the box tool, you go from the wick, the start of a wick. So we're going to look right here and we're going to measure to about the top of this area. You pretty much want to get as many touches in that area as you can with a box. And the same for down here. So, I'll be looking for about here, around there. I think the wicks are more important. As you can see here, we've got touches here, touches here, touches here, touches here, touch here as well. We've got a few touches. Whereas if we were to just draw a straight line from, I don't know, I assume a lot of people are going to draw it from here. It's pretty inaccurate. The chances of price getting to here again and touching this area is a lot lower than if price were to come up to this area. But then if you draw a simple line, then how do you know what area that is? Because you're either going to aim for the exact line, which, isn't probably going to work out in your favor. Price is probably going to fluctuate around these wick areas. So you have a better chance of finding a better entry if you use the box tool. And now we know that anywhere price is in here, we can look for a trade on a lower time frame. So this is kind of just a diagram of what I mean. Obviously a lot of the time support and resistance is drawn up like this on a graph. You got your roof and then you got your floor and price hits it and rebounds. When in reality, it's probably more consistent to this. Not all the same level, but a very similar area of price, and the same for down here. So that's why I think drawing your support and resistance up with box tools is going to give you a lot more of a better chance of getting in a trade on a lower time frame if you're using multiple time frame analysis. Another thing to go over is support and resistance is weaker the more it is tested. So I think over here, we draw up our support and resistance, and draw it up down here as well, something like that. A lot of the times, it's taught that this area has been tested 6 times. The chances are it's gonna hit that area and come back down. But you'll find that the more it is touched in a short time frame, I mean, look at all these taps right here. That's really starting to break down this level, and a way that a buyer and a seller would look at this is that buyers are willing to get it up to this level again and again and again. So obviously this level for them is a very significant level, and they're going to be eventually willing to push it through that level, which is what happens here. They just blast it through there. And, a lot of people would have had a position in this level, an order to be filled, because they're thinking, yep, here it comes, little pullback, it's going to come up to this area, we're going to look for a sell. And, I mean, same goes for the other side. If we just move this over. Obviously it broke through to the top side. That doesn't mean that this support level is invalid. It just means it might come back later and test it, which is what happened. It broke through that top level and it came back down to test this level. A lot of people would have been looking for buys here in this level. But considering how many times that this had been tested, and even a couple times, had broken through and faked out and come back into the area, it just broke right through really quick. Had a tiny little bounce, that would have got a lot more people into these positions, and then eventually they just got wiped out. So it's important to know that if a level has been tested multiple times, you're at a higher risk of it not respecting that level. If I was to trade support and resistance, I would be looking for, maybe 2 to 3 tests, and any more than that, and I wouldn't trade those levels, because once it starts getting to 4 and 5, 4 and 6 tests, then it starts getting a bit more risky. So around the start of this level is where I possibly would have started trading it. But as soon as it got to past here and it was hitting 4, 5, 6, 7, 8 tests, I highly recommend staying away from that level. See what the market does, and just react. Don't try and predict at that point. Righto. Another point: the higher time frames. Support and resistance, usually it works better. Usually it's more of a respected level. Right now we're on the 4 hour. If we jump down to the 15-minute, you'll see a lot more breaks of support and resistance levels. So for example, we've got this level here. This is a support level. It pretty much had no respect for this level whatsoever. It had a little bit of consolidation on that area, but broke straight through. And it's the same with these levels. We've got here, broke right through. So there's a lot more chance of it not respecting those levels on a lower time frame than there are on a higher time frame. And that's not to say that it won't happen on a higher time frame, because it most definitely will. But you just have better odds of it respecting those significant levels. So yeah, that's pretty much that. There's a couple other things I'll go through. So support and resistance can be flipped. So once resistance is broken, it can become support. So simply putting it is, once this area had been broken, it had come back down and touched it and used this level as support. So these are completely valid levels. There's only 2 taps. Tapped, it rejected this area, respected it, come back up, come back down to test it again, and potentially you could be looking for buys in these areas with a stop loss under here. Pretty simple. If it breaks a resistance level, and just a quick rule that I follow, if it forms a support and resistance level, real sloppy, like this, and we have our resistance level, let's say, if it breaks through, for me to be able to confirm that this is a true breakout of a resistance or support level, I wait 5 candles. So what I mean by that is, if we zoom in on this area right here, so I'll just move this down for demonstration purposes. So a lot of people would have been trading this as a breakout. This one candle, it breaks out of the level, everyone's freaking out. Yeah, well, it broke that resistance level. Let's get in for a buy. It's going to take off. And then to be shortly followed by a stop loss hit, because it sunk straight back down into the level. So the way I avoid that is I have a 5 candle rule. So a trade must have 5 candles outside of the range. This area being the range, the support and resistance range. So a candle must have, market must have 5 candles outside this range to be confirmed as a breakout. So we have 1, we have 2, 3, 4, and 5. At this point in time in the market, I will be able to confirm that this is, in fact, a true breakout, and I'll be able to trade it as if it's going to use this initial resistance as support. So at this point, after 5 candles, I'll be looking for price to come back down here to get a buy. It seems like a very silly rule, but it has definitely saved me a lot of the times. And for that, it would have saved me in this trade if I was to try and do a breakout trade. I wouldn't have got into this. It's only 1 candle outside of the range. It's not good enough. It's not confirmed. So once it hits that 5 candles, then we're right to go in and look for buys on the upside, and a reversal of this resistance becomes support level. So as well as like short-term consolidation levels, like these levels, we have to also be wary of long-term support and resistance. So these will be picked up a lot more on your high time frame analysis. So a lot of traders will predominantly use this as their support and resistance, and obviously a few are gonna use these ones as well. So obviously this is our level here, and a box to mark it up, and using this box, especially in this situation, is showing how important it can be. If you had have just lined up that bottom, you would have got a retouch here, or you would have just missed it actually. You'd have just missed this touch. Maybe it's close enough for you to confirm that that is a retest of this support level. But yeah, using the box, you're going to get a lot more confirmations. And yeah, the area is a bit wider, so you kind of might get into that headspace where, is this the true resistance and support level? Like, is it further down? Is it a little bit higher in the box? That's when your multi time frame analysis is going to come in handy, and you can look for other confirmations. So we're on the 4 hour now. If it came down to here inside this box, you jump to your 15 minute and you look for other confirmations to say that, yep, this is the area I want to get into. It's going to reverse. Let's go for a buy. So this is a more long-term support. It's been probably 2 weeks since it had been back to this area, which kind of gives it more respect in a way. You know, Less tested areas that have held their own over time tend to have a high chance of reversing in that area, which is what happened here. It came up, traded for a couple of weeks, came back down, hit that area that's only been tested once here before, and it rejected and kept moving to the upside. And as you can see with the box markup, we have a lot more tests in this area, here and here and here, whereas you would have missed all these higher ones with just a single line markup. So that's pretty much it for support and resistance. As I said, these back to the basics are super short, and I try and keep them well informed but super simple as I can. Hopefully you've learned how to use your support and resistance more efficiently now, and you'll be able to go out into the charts and find some really good trades using this method. Thanks very much for watching. Visit our website, quinceydunn.com, to learn more advanced stuff like this. This is all super simple, basic stuff that we just want to give out for free. We don't want to charge for this stuff. So yeah, thanks for watching, guys, and see you later.